Welcome to Chairman's Briefing. Here we round up the latest mining headlines. I'm Rachel Lee. Gold soared but was not able to hold on to its gains. It declined below the previous highs and below the $2,400 level. As we watch to determine the sustainability of gold's general upward trend, we want to point out that the incremental gold buyer has moved from a price-sensitive consumer to an AUM-sensitive asset allocator to a mandate-driven central bank. According to BMO analysts, this shift has been a key reason in gold trading at a consistent premium to the cost curve over the past few years. Also, China's push to de-dollarize trade is pulling gold back into the global monetary system, which is a secular trend that's expected over the next decade. Among wealthy investors under the age of 43, 45% own gold as a physical asset, and another 45% are interested in holding it, according to a recent study by Bank of America Private Bank. And according to a study by money managers at State Street, Millennials carry the highest allocation of gold in their portfolios at 17%, far outpacing both Boomers and Gen X at 10%. Liz Young-Thomas, who is head of investment strategy for digital financial services firm SoFi, said that as Treasury yields rise, cash is paying a high interest rate, and gold is rising along with it. We're seeing returns that we normally don't see in such a short period of time. Naturally, when assets have strong returns, younger audiences start to perk up. Next, those with significant exposure to the building blocks of the electric vehicle don't know how to weigh Trump's vow or threat to end the drive toward green. In his address at the Republican National Convention in Milwaukee, Trump stated that he would end the electric vehicle mandate on day one. According to Trump, the move would result in saving the U.S. auto industry from complete obliteration, and he'll save U.S. customers thousands and thousands of dollars per car. Now, where lithium, the commodity, is concerned, the rout continues to deepen within the battery metal, tagging multi-year lows and showing no signs of recovery. The price of the metal has plunged roughly 80% since late 2022, and benchmark Mineral Intelligence sees the supply glut broadening through 2027. While it's said that the cure for low prices is low prices, according to Benchmark, the market is expected to see a 32% increase in supply in 2025, outpacing demand expansion of 23%. The surplus is set to peak in 2027 before the dynamic shift to a supply deficit at the end of the decade. As mainstream media probes deeper into Victoria Gold's recent history, details concerning the weak approach to safety protocols are emerging, a code of conduct that may have set the stage for the heap leach spill and landslide on June 24th. Individuals who approached the northern miner to share their experiences of working at the Eagle Mine spoke up about neglected incidents and repairs, attempts to subvert injury reports, and widespread drug and alcohol use in a supposedly dry camp. They asked not to be named to avoid career repercussions. And in response to the idea that Victoria Gold is finished financially, well-known Rick Rule posted on X, formerly Twitter, likely correct. And unfortunately, the entire Yukon territory is suffering in the aftermath of the disaster. First Nation of Nacho-Nayakdun, upon whose territory Victoria Gold operates, recently requested that Cantex Mine, ticker symbol CD on the TSXV, temporarily pause all exploration activity at its North Rockla project, which also lies within their traditional territory. Cantex subsequently announced a temporary pause on July 23rd. Snowline Gold, ticker symbol SGD on the Venture Exchange, just released a valuable set of assay results from its ongoing drilling at Rogue Project's Valley deposit, which is 250 kilometers away from the Eagle mine site. In this current market, where truly exceptional results can expect a warm embrace, Snowline's assays likely would have mobilized buyers from the sidelines were it not for this Eagle mine debacle. But it appears that investors have grown weary of Yukon plays in general. Snowline attempted to rally on the heels of their drilling results, but has since given up. Let's hope that pervasive negative sentiment underpinning Yukon exploration is a temporary phenomenon. FreeportMcMoran plans to spend $7.5 billion to expand its El Abra copper mine in Chile. This is a project expected to take 7 to 8 years to develop due to permitting requirements. In a call with analysts after reporting a Q2 earnings beat, CEO Kathleen Quirk said the company is preparing to submit an environmental impact statement by the end of the year. El Abra is a JV between Freeport and Codelco, one of the world's biggest copper producers. El Abra is projected to produce 750 million pounds of copper and 9 million pounds of molybdenum annually once the expansion is complete. Lion One Metals, an emerging Canadian gold producer, tabled a private placement over a week ago, a raise that ushered in a new 52-week low in its underlying common shares. The deal was priced below recent trading levels, 27 million units at 37 cents per unit, which includes a full 3-year 50-cent warrant. Now, the financing was quickly upsized to 10 million, and then the company attached a 2 million sidecar. Investors were less than pleased with the multiple dilutive raises. You can see community discussion on the LIO channel at CEO.CA. Next, according to S&P Global, mines in the U.S. go from discovery to production in an average of 29 years, longer than in any other country except Zambia at 34 years. The long U.S. lead times stand in contrast to the country's sizable resource base. For instance, the U.S. copper endowment is more than 275 million tons in reserves and resources, comparable to those of Canada and Australia combined. U.S. lithium, which sits at over 43 million tons in reserves and resources, is more than twice that of Australia, which currently accounts for half of the world's lithium production. The first phase of construction at BHP's Jansen Potash project is halfway done and is on track to generate first production in 2026. Expected potash output is 4.2 million tons a year. Potash is part of Canada's critical minerals list due to its importance as a key soil nutrient, essential for ensuring global food security. Botswana, the world's largest producer of rough diamonds by value, frequently ranks as Africa's best country for minerals investment. That's largely because of the nation's policy predictability in an industry that is the nation's economic mainstay, making up about 1/3 of budget revenue and the bulk of foreign currency receipts. A draft amendment to its mining legislation may allow citizens to buy up to 24% of new mining projects where the state doesn't claim its 15% stake. And that's a wrap for your briefing today. Remember, CEO.CA subscribers get this briefing every Thursday. The link to subscribe is in the description below. Or, of course, keep tuning in on Mondays and hear it from me. Thanks for watching, and we'll see you next week.